I'm Charlotte McLeod with the Investing News Network, and here today with me is Nick Barisheff, President and CEO of BMG Group. Before we jump into the questions, just a quick reminder, if you enjoyed this video, make sure you hit the like button and subscribe to our channel. Thank you so much for being here online with me today, Nick. Great to talk to you. The last time that we had a chance to speak together was back at the end of February. And I remember you mentioned that March would be a month where people would be able to ask for delivery of silver on the COMEX. So just to start off, I wanted to check in about that. I believe it was expected that perhaps more people would ask for delivery than was usual. So what ended up happening there?
Well, that's what in fact happened. We've had massively more requests for delivery than normal. So that's an indicator where more and more people are looking for physical. There's been rumors of shortages from the Perth Mint for converting your unallocated accounts to physical. So people are concerned, why the delays and so on. So these things are all coming together. The Silver Institute did a report showing, massive amounts of surplus silver. However, what they're counting as surplus silver are basically investments in the ETFs. So it's really not surplus that's available. And when you take out the ETF components, then you're actually at a deficit. So there's a big discrepancy there. And we're still, in the gold to silver ratio, we're still at 68. Thereabouts, it's dropped somewhat, but it's well above the long-term mean, which is about 40. And at times it's gone as low as 20. Last year, of course, silver was up 47%. Looks like it will be higher this year. And as things transpire, catching some drift there is the fact that inflation is clearly ramping up. Food prices are up about 30%. Lumber prices, steel, iron, all these are up double-digit amounts. So we're seeing a spike in there. And then on the other side of the coin, we've got employees not willing to come back to work because they're getting more money from unemployment and COVID relief than they would if they went back to work. So a number of states are changing their policies and cutting that back because many of the companies that hire lower income earners are having real difficulty finding employees.
Yeah, definitely. We've got a lot going on here and a lot that's happened since we spoke previously. There's a few things you mentioned that I would really like to come back to in just a moment. One thing I did want to follow up on is, these increasing numbers of people taking physical delivery from the COMEX. Maybe you could put into context why that's unusual and why that doesn't happen for the most part. I think a previous number that you mentioned is 90% of people don't usually do that.
Normally 90% just settle in cash, but now it's a greater and greater percentage taking delivery, which is putting real stress on the COMEX. There's another aspect that's happening that's going to influence the paper markets like COMEX is the BIS's change in policy that's going to have a major effect on bullion backs and their ability to borrow and deal in unallocated silver. And that's a few months away.
Yeah, and definitely we've been hearing more about unallocated accounts. So maybe you could go into that a little bit more and let me know what you think investors should know about that.
Well, unallocated accounts are simply accounts where you don't have direct ownership of the bullion, and the same applies for gold or silver. To actually own bullion, you need to get a document from the seller that lists the refiner, the serial number, the exact weight and purity, and a document needs to transfer it to your name. Whereas an unallocated account, you're basically getting tied into the price, but you don't actually own anything. So a lot of the leasing activities are taking place in unallocated accounts, and that's why you get delays when people ask for delivery. Then there's a problem. So yeah, unless you're a very short-term speculator, unallocated accounts aren't the way to go.
And what was the change you were mentioning that we would be seeing there in the near future?
Well, it's with the rules of the BIS in terms of bullion banks that in terms of the amount of collateral and physical metals they have to hold. So right now, up till now, there haven't been any limitations. As a bullion bank, you can basically sell an unlimited amount of bullion short, and there's no checks and balances on how much bullion you actually have.
All right. And I think another topic that continues to arise when we talk about silver is the disconnect between the price you see when you look up online, what's the spot price of silver? I think it's around 27 something today, and the price that you pay when you actually go out to buy an ounce of silver, in a store or something like that. So could you maybe talk a little bit about that disconnect and how big of a difference we're seeing there right now at the moment?
Normally you take the spot price, which is a theoretical price, and then you have to add manufacturing costs and premiums and so on in terms of the seller's profits. But as you get short supply, you get big premiums. And a lot of people think that the prices you see on places like eBay and Amazon are actually more realistic. And typically, like for an ounce of silver, it's closer to $50 than 27.
And you mentioned eBay, Amazon. I think we see people possibly selling on the marketplace on Facebook right now. What do you think it means for the market that we're seeing people selling in these venues right now? They want to sell their silver online in these ways.
Well, I think it's just as real. Like we have the stock exchanges, which people buy and sell stocks. Well, eBay and Amazon are becoming like an exchange. So you have such a high volume of transactions that it's not just an aberration that somebody bought, one coin for $50. That there's a high volumes of sales taking place at those numbers. And a lot of times those venues become more popular because recently a lot of the coin dealers were out of supply of particularly silver coins. So people went to other channels to obtain them and so on.
Right. So for you, maybe an interesting question is what the real price of silver is today. You mentioned that $50 level. Where do you see a fair price being for the metal?
Well, I think the $50 price is the more realistic. I mean, the issue is that people are paying this price. It's not a theoretical ask price. And it's people are buying coins and so on at that price. So as time goes on, it's a good area to monitor for what the real physical price is. The spot price, that's largely for very large buyers, typically buy 1,000-ounce bars, that type of thing, and so on. But once you get down to the coins, that's a more realistic price.
All right. Now, we've had the silver squeeze narrative that's been a big trend in the silver space for most of this year. But I wanted to take a moment to ask you about some of the other factors that are impacting the metal. You started to talk about inflation. So I wonder what your outlook for inflation, for example, is looking like as we head into 2021 further.
Well, the official sort of version of inflation is the CPI index, which is currently just under 2%, let's say. John Williams of Shadow Stats does an alternative index based on the previous methodologies for calculating inflation. So he gets around 9%. There's also another index called the Chapwood Index that deals with inflation on a number of common products, but in the cities. And so they get an average of about 9% as well. That's already the case. So that's a more realistic level of inflation, which then comes down to, like when you get to investing, and unless your investments are generating higher than inflation, you're losing money, like you're losing capital, So right now it's difficult to make safe investments that are, at or above the true inflation rate.
And yeah, exactly. That's going to be a huge challenge for investors. What would your advice be to people who have that, for example, 9% number in mind that they're looking to beat?
Well, that's where you see both gold and silver will closely track inflation. So if you look at the rise of gold and silver since 2000, yeah, it's averaged over 10%. So it keeps above that. There are some fluctuations, more so in the case of silver, but as an overall average. And that 10% is basically in all the currencies. It's not just, one currency like the US dollar. It's across the board. So you have basically the same thing. And typically gold and silver always maintain or surpass inflation. That's where, you don't really get rich, but you're not losing money, And everything else, you're potentially losing money.
Right. So we have inflation as a factor that we need to watch when we're looking at the silver and gold market. Any other influencers for either silver or gold that you're watching at this moment?
Well, nothing, but they're both, particularly silver is a very vulnerable market because to many of the high-tech manufacturers, at some point they're going to realize that they better stockpile silver because without it, they're not going to make anything. And even though the amount of silver is relatively small in a cell phone, but without it, you don't have any cell phones. So it's a critical metal to have. So at some point, it's happened in the past where industrial users take a big position in silver to make sure they can keep manufacturing up.
Right. That's a very interesting topic, I think. I was talking pretty recently with David Morgan about Tesla, and does Tesla have the silver supply that it needs?
Right.
We don't know. Yeah. And do you have a sense of, some companies probably have secured their supplies, some have not. Do we have a sense of where that balance might lie?
Well, you see, this is where the COMEX deliveries might be taking place, because if you're a manufacturing, paper silver doesn't do you any good. You actually need the physical. So that's where you could be seeing some of the bigger manufacturers taking positions that way.
And you mentioned we've seen this happen in the past where the manufacturers maybe try to secure their supply and the price goes up. Is there an example that you could mention that we can
Well,
look
it's,
back
it's
on?
happened in the past where palladium and platinum,
Right.
platinum is used primarily for catalytic converters for diesel cars, and palladium can be used for gasoline cars. But again, you don't make the cars without supplying catalytic converters. So that happened before, where there was short-term spikes and shortages in those metals.
And do you have a sense of, if we're looking at that for silver, at what price might these companies start to get a little bit nervous and think, all right, I should perhaps go secure my supply of silver?
Well, I think it's not so much the price, it's when they start getting worried about availability, that physical supply becomes difficult to get. That's when you have a bigger problem, because when you consider that you've got like a less fraction of an ounce of silver in a cell phone, so whether it's $27 or $270 doesn't make all that much difference to the price of the cell phone.
Right.
So it's not so much driven by price, but without it, you don't make cell phones.
Okay, but that's really interesting. Yeah, I'm curious to know, are there any other factors that you think we should have our eye on for either the silver or gold at the moment?
Well, overall, like the big factors are the amount of money printing and debt that's gone on. It's like never before in history. So that's ultimately debasing the currencies. And it's not just the US, most countries are following suit. So as you debase the currency, price of gold rise, silver follows, but usually the performance of silver is significantly higher on a percentage basis. So those are the overall big driving factors. It's the amount of debt, money printing, like never before in history.
Of course, and definitely those have been themes that we've seen coming up again and again and again. I think that a question we have among our audience is, this is only continued. We've seen it ramp up in particular during the last year due to COVID-19. Why do we not have gold and silver prices higher than they are right now? Are we simply taking a breather? What would be your view there?
Well, I think anybody that studies the issue in any great depth will come to the conclusion that the prices have been manipulated by the paper markets. So any kind of manipulation ultimately fails, and then the prices have to go back to their kind of the mean, and that's simply what's happened. It's obviously in the U.S. government's interest to keep the prices, particularly gold, down, because otherwise it's kind of like a non-confidence vote in the U.S. dollar.
And to you, what does the end of manipulation look like, and how do we potentially get there? I know that's a big question, but gotta try to go there.
$10,000 gold.
Right, of course.
That's ultimately what you get to. Also, when you look at the relationship between the amount of paper assets like stocks, bonds, mortgages, and the amount of gold, at some point in time, the pension funds are going to start investing heavily in gold. Right now, there's only 4 pension funds in the world that have any kind of meaningful position. But if the pension funds decide we need to, have gold to shore up our portfolios, then that can break the manipulation and create a whole new regime in prices.
Interesting. So those would be a component of getting out of that cycle. Okay.
That's right.
Interesting. Well,
Yeah.
I wonder if you have any final words you would want to leave the audience with as we go forward into the year.
Well, it's simply that I think people, depending on their financial situation, need to try and accumulate as much gold and silver as their investments allow, and at the very least, reallocate the portfolio. To me, I think that today you need at least 20% in precious metals to just maximize the portfolio. And we're going to come into a time where the market's going to correct, and everybody talks about how it's in a massive bubble. And when it corrects, that's when gold and silver really shine.
That's right. Well, that seems like a good place to end on for today. Thank you once again for being here to talk about silver and a little bit about gold.
Great. My pleasure, Charlotte.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Barisheff with BMG Group.